All right, so this video is going to go over how to spot a fake trend, okay? As we both know, this market likes to fake a lot of people out all the time, okay? That's just how the market moves, and that's how it's designed to trap retail traders so they can get stopped out at the exact bottoms and things like that. So there's a two-part series for this one. It's about spotting a fake trend. There's two ways to do it. The first one I'm going to show you right now. So let's get into it. Now, when it comes to a fake trend, obviously we understand a real trend, okay? For example, if this is our trend, we're in an uptrend. Now, we first need to understand what is a shift in trend before we get to that, okay? And a shift in structure per se, right? If we wanted to see price go from an uptrend to a downtrend, what would we want to see, right? We would want to see price take out a low and then start making lower lows and lower highs, right? So you'd want to see price come back down and then fail to make a new high up here, then make another low, okay? And at this point, now we're making lower lows, making lower highs, and we can continue this process, okay? So the first sign that we get that price is going to shift trend from an uptrend to a downtrend in this example is when we get a break of that low, okay? In an uptrend, highs should hold. In an uptrend, lows should hold. In a downtrend, highs should hold, okay? And so we know if price is continually holding the previous low that we have and it cannot get below it, we're in an uptrend. And so that first sign that price is now going to shift into a downtrend is when that low breaks. And this is where the fake trend comes into play. This is extremely dangerous to immediately think when price breaks that low that we are now in a downtrend. Okay, this is the fake. This happens all of the time. All of the time. Okay, you'll see price in an uptrend just like this. Blah, blah, blah. You'll see price make a new low. Everybody's like, oh my God, we broke this low. We're starting to see a downtrend. Price pops up. They go short here, expecting to move lower, and then it just goes right back up. And you're thinking, what just happened? You know, I thought we were shifting trend. I thought we're starting to see a downtrend. Why is that happening? And so I'm going to explain that in this video right now. The first reason for that, okay? Now, the first reason is actually something you may not expect. You have to use one little tool to pretty much on every platform, every broker, the Fibonacci tool. Now, I'm not going to go out here and show you, hey, listen, you got to look at the 0.236, the 7 point. No, you don't need any of this, okay? The only level that's important is a 50%. I'm thinking, Jordan, is this like some number you pulled out of thin air? Like, why 50%? Where did you get this from? 50% is not something I came up with. 50% is something that is known in the institutional markets, simply because if you think about it logically, right? If I am even for products, even for whatever it is, what is 50% known as? 50% is known as the fair price or the middle price, which means if I'm a buyer, anything that's below 50% is going to be a good deal, right? In terms of price or whatever you want to call it, right? If we're in a market and I'm looking to buy something and I can get it at a 50%, or not even 50%, if I can get it lower than the middle price or the fair price or the average price, whatever you want to call it, that is a good deal, which means anyone who's buying below 50% are going to be institutions or the market makers, okay? The hedge funds, the ones with money, right? Trust me, they're not going to be buying while the price is high. They're only going to be buying below 50%. They're only going to be selling above 50%. That's extremely important. So let me show you an example of how this works and what this means. Simply means, in an uptrend, every low that goes below 50% is what we call a strong low. So let me grab this here. So we have a deep pullback, that's a strong low. Another deep pullback, strong low. Another deep pullback, strong low. These are all strong because price went lower at least, or right to it, the 50% mark. Below it, below it, below it. And then you go ahead and you move it. This one goes up here, this one goes up here, below 50%. And the trap that a lot of people get put in is that a lot of times, price will make a low that is just very shallow. That'll make a new high. We'll see something like this, right? You may pull out your little Fibonacci tool and you go, okay, we probably retraced like maybe 20%, I don't know. And we made another high. And this is when you got to ask yourself, are the institutions or the hedge funds, are they buying up here? No, they're not going to be buying up here. Trust me, if we are in a market that looks like this, okay, they buy low and they sell high. They're not going to be buying while the price is high. Okay, a small pullback is not enough for them to get in, which means you don't want to be getting in there as well. Now, could we have a situation where price just, has these small pullbacks and keeps going up and up and up, and you're like, Jordan, I'm missing the move? Yes, that can definitely happen. But if you want to have the best setups, the best probability of success, you only want to be buying pullbacks that are lower than 50%. So, what is the fake? What does that mean? How does this work? Well, a lot of times we'll get something like this. We'll get a deep pullback, we'll get a small pullback, and the price will end up breaking that low. And we'll go back up. Price breaks this low here, then everyone at this moment in time, when price is down here, starts screaming, oh my God, we're in a downtrend. Okay, we have a sharp move lower, we break that low, and we start to say we're in a downtrend. This is the trap. This is what we call a bear trap. Right there. Okay? A bunch of people see this short, or see this break, and they're like, hey, I want to get short. They wait for a pullback, expecting another move lower, and price goes higher. This is a very common pattern that you see all the time. And you'll notice a lot of times this pullback will go at least 50% from this retracement here, and then end up ripping right up. Okay, when you start to add in supply demand, there's a lot of things that get involved with this. You'll start to notice, hey, there's a really good supply zone here. Why is it not holding? Because of market structure. We are still in an overall uptrend. Okay, this is not a real low. This is not a real low. Okay, take a screenshot of this. Do whatever you have to do. This is the bear trap. Okay, do not get trapped. This is the fake trend. So let me show you two more examples so you can actually understand this and see this in the chart. Now, Amazon, you can see, you wouldn't be able to tell until recently, but we're starting to see forms of an uptrend here. Okay, we've been in a downtrend since 2022, making lower lows, lower highs. Let's just say we know at this point that we're in an uptrend. So what does price do? Price moves up, we have a pullback, we move back up. Maybe thinking, Jordan, if we make out, our high points and our low points, we have a high, we have a low, we have another high. The price goes up, and we end up breaking this low. You say, Jordan, we broke that low. That's the sign that, hey, we're starting to see a downtrend, right? We got that break. We should see price move over. Let's get a pullback up to supply for a move back down to $80. We just end up going right back above it. The reason is, did we pull back 50% from this low to this high? We did not. Okay? Institutions are not going to be buying in this area. Okay? They were buying down here. When price goes up and we have a small pullback, they're not buying up there. So then we see that breaks. Price breaks this low. And then we can, once the new high establishes, we can move our retracement up. And now, over here, now we're in a good deal. Right? Back here, we only knew that price went from this low to this high. This would not be a good deal to buy in. Okay? And we can talk about time frame of in the higher time frame, that's a really good deal. But that's for another video that you'll see later coming up. But for now, just in the smaller time frame, or in the daily time frame, right? Once we get that 50% pullback, now we know, okay, this is going to be a good low. Price moves higher. You can repeat the pattern. Let me show you an example on Walmart. Same thing. Okay? Oops. Price starts low, high, low, high. Pullback way more than 50%, right? Almost even, which is really good. Come back, 50%, back higher. Another one, 50%. And yeah, typically you can just eyeball it. It's not always perfect. You can always just drag it out, but you can see we're constantly making lower lows and lower highs. Sorry, higher lows and higher highs. So you can see that's our low. Then we end up making a new high. That's our low. We pull it back, we make a new high. That's our low. We pull back, so we break this high here. And then we get a pullback here, and we move up. And this pullback right here, you may be saying, Jordan, right here, we end up breaking that low, right? Wouldn't that be a start to see a downtrend, right? That's the same pattern you're talking about, just like this, right? We break this low. That's a shift in trend. Shouldn't we start to get bearish? No. Why? Because this is not a strong low. This is not retrace 50% from this low here, which means it's not in a good deal in this scenario, which means institutions are not buying right here. Okay? Maybe they were in terms of earnings, right? Maybe they had some insider info, but typically they're going to be waiting for that 50% retrace. And you can see exactly how the market likes to work. Prices start to go in an uptrend. They have good earnings. Now a bunch of retail. Everyone wants to buy, buy, buy. And then what do? They take it lower. Where do they take it lower to? Right below this key support line, stopping everybody out. And then they move it up higher. You guys see where I'm getting at? And if we pull the retracement from the low to the high, now we end up getting that good deal. Now price, now that we've established a new range, price has now entered a good deal. I mean, you could have entered it down here, but down here, okay? Really, really simple stuff. By simply using the 50% retracement tool, you're going to know exactly where the real trend is, okay? And you're going to understand that this is all a fake. So when you try and buy this pullback here down to demand, you put your stop loss right here, right under that low, and then you get stopped out, with the 50% rule, that shouldn't be happening, okay? And the reason why this works so well is because people put their stop losses right below new lows of an uptrend, which is a logical stop, right? If price is an uptrend, price should not be going lower than the previous low. So it makes sense to have your stop loss right below it. So when we see something like this and we understand that institutions are not going to be buying in this area, you can see exactly how it plays out. You get earnings, Amazon goes up, a bunch of retail buys. We even get a huge pullback, a bunch of retail, they keep buying, and then boom, they shake everyone out here. Now everyone starts getting bearish. It's a bear trap. Institutions get long, they bring it up to new highs, and they sell up here. The same thing happens every single day. It's the same pattern, okay? So hopefully this video made sense, okay? The next video, how to spot a fake trend, part 2. It's going to be more over another way to spot a fake trend, because trust me, there's a lot of ways that they'll fake you out. This was just one of them. So hope you guys enjoyed this one. Study it, take some notes, and I'll see you guys in the next video.